Welcome back to Ways to Love Your Money. I'm Elisabeth Dawson, and today we have our resident real estate expert with us, Jonathan Olow. I'm going to ask him some interesting takes on what's going on with this pandemic crisis that we've been going on when it has to do with real estate, relationships, and maybe even just making some financial changes or moves, logistically, because now is the right time to do so. Well, without further ado, thank you so much for being on the show, Mr. Jonathan. We always love to have you here, and it's great to see your smiling face.
And I love doing this virtually, just being right next to you.
Oh,
So I hope all your family and Copia family are healthy and safe. So,
yes, yes. Luckily, we are all very, very healthy and safe. So, with that, Jonathan, where do you think things are at with the real estate world today? I mean, you are so
well,
tuned into the San Diego market.
San Diego, Palm Springs is where I'm covering these days. And again, anywhere in the United States to
Yeah.
connect people. But locally here in Southern California, but we'll say luckily or unluckily, our inventory is quite low, which you know what that means. When you have low inventory, there's usually a higher demand. And when we have interest rates now dipping below 3%,
Right.
that is an inspiration to people either to refinance, so they can
Mm-hmm.
reach out to me and I can connect them to refinance and save a couple $100. And some of my clients have actually written off their mortgage insurance that they were paying $200 and $300 because properties have gone up in value. So they're actually, during this time, they refinance and they're saving three, four, $500 a month.
That's great.
So
So you're telling me that real estate prices have actually been going up here in San Diego, Palm
uh,
Springs area.
yeah, they are going up because again, there's low inventory, there's multiple offers. I just went into escrow a couple of weeks ago, and there actually we were able to thwart off about 25 showings because we
Wow.
went in the first day, got out there, we had relationships with the agents that were there, and we beat out probably 25 people that didn't even get to see the property
Oh
because
my.
we were able to really work with that agent and commit to what we were doing. And we're going to be closing escrow this Friday. And we didn't have to go way over the list price. We gave them a little incentive to make it happen, but it did actually praise as well.
So it's really becoming a seller's market then.
Well, it is a seller's market in the sense of what they have, but
Mm-hmm.
it's also can be a buyer's market if you're in the right place at the right
Mm-hmm.
time because some there was one person that actually reached out to me. They wanted to be my client, and then they made the comment, "Well, I'm going to wait for the market to take a crash."
Mm-hmm.
And so it's like, when you do something like that, I can't say that they're not real and that's the object, but people that think like that will always or almost always miss the curve because when the prices may go down or adjust, then interest rates go the other direction. So why not get what you want today and have the lower interest rate for the long term,
Mm-hmm.
for 30 years rather than wait till next year and you're basically paying the same amount or more because
Mm-hmm.
interest rates have gone up.
Well, and I think it's an interesting thing to talk about too, Jonathan, because of the fact that this is the first recessionary period that I've ever experienced when it comes to the market crisis, the banks tightening money, bond market being low, all these things. It's usually this trifecta, but when it comes to real estate, it usually follows the accord with it. But this particular time, it's not. And do you have any
It,
opinions on that? I know I do, but do you have any opinions on that as to why the real estate market is actually surging and growing and less inventory, so that creates a market? What are some of your thoughts on that?
um, Let me hold on 1 second. There you go. Sorry, I lost the screen. Um, it is kind of a phenomena that's there because usually it does follow, and it could follow later down the line. It just depends on how we're going to ride this pandemic out, how people are going to have their jobs, if they're going to have their jobs,
Mm-hmm.
because it will affect them if they're paying rents or if they're paying mortgages. And so that's just something that's going to follow. But I've always found that even when we were in the day that, the prices plummeted and we had, all of the bad stuff that happened.
Right.
um, we're all noticing because we're changing our lives and how we adapt to this time, that there are good things that are coming out of it. And unfortunately, if somebody's affected and they can't make their mortgage payment, like in the old day, and they'd had to do a
Mhm.
short sale,
Right.
now first time buyers were able to get into the market. So
Mhm.
there, you're going to have, it might be good for somebody or it might be bad for somebody. So my job is to look at all the parties, and give them the best information that I have today.
Mhm.
So, and unfortunately, we don't have a set date when this is, we're going to come out of this.
Right.
So,
Right.
I'm,
And I
yeah.
take that into consideration too. I think that this has been a very interesting experience for all of us. I think people now are investing more in the place that they live long term, and if they have to spend more time there, they're really invested in that. And I think that's really where this is coming from. It used to be just the summer months would become this frenzy because they wanted to get their kids into a new school district, or all the traditional things are different now. They're different. We kind of have a new normal, but it's still a little sporadic. But I think people really want to live in the homes that they can enjoy their backyard. I mean, I think I read this that it was something like, I don't know, 30 to 50% higher increase in patio furniture sales this last 4 months, and people are investing in where they live.
And that's correct. And that brings me to, more people working from home, so it may
Mm-hmm.
work out perfect, and they're loving their home more, and maybe they're spending a little bit more money, hopefully stimulating the economy, and still being able to move forward. But there's also a lot of people that are realizing, I don't really want to be here anymore,
Right.
or I need to plan for the future, and you know what, I need an office, or I need a big closet that I can close myself off into to be away from the kids, or because there's a possibility that this may linger a long time
Mm-hmm.
or come back in a different form. So
Right.
we just need to realize, and a lot of my clients are saying, not all of them are saying, but that they do talk about, oh, you know what, if I had this and this, then I could work from home and my kids could be,
Mm-hmm.
doing their thing, or doing homeschooling, or whatever it's going to be. And unfortunately as well, people are also learning about relationships, whether they're growing or they're changing, we'll say. I don't like to say the big D word, but
Mm-hmm.
if people are realizing that that the relationship is not working, then they're going to need a place to live and most likely downsize.
Mm-hmm.
So,
And something
so
before we
again,
got on camera too, we were talking about was that someone might have lost their job, and they might not be in a place where they can actually buy right now. But how do you think that's going to work? Let's say within 3 5 months they can actually get a job. Can they still qualify for real estate? How do you think that's going to work? How do you think about how it's going to work for
well,
mortgages?
yeah, that's a great question, because typically, if you're going to have a break in your employment and you're
Mm-hmm.
going to go back to that, I am quite confident that the lending or the banking world is going to see that
Mm-hmm.
you were furloughed or something. And I have a couple buyers that were ready to go, and they're like, I can't do it now, which. And lenders right now are going down to the day that you close and calling the
Sure.
the employers to double check verification of employment,
Mm.
because they usually would, like 2 or 3 days before that, they would call and double check. But now they may be down to the last couple hours right before the funds go into the bank to be sure, do these people have a job?
Right. It's pretty amazing because I think it is so different that this time around since 2008 occurred, the real estate market boom, bomb, if you will. Uh, that was so different. There were so many prices of properties that went down probably lower than 50%, wouldn't you say, Jonathan, in value? Some
Yeah,
did.
it does.
Yeah.
Yeah,
And
what I found in San Diego with the newer communities where people paid tons of money, that when the bust happened, they lost a lot of value. Established neighborhoods typically
yeah.
didn't. If you were in a nicely established neighborhood, because you probably have an older population, may have already been retired, they're already set, they have
Mhm.
those things, that they didn't have to rely on, so they didn't have to refinance. They didn't have to. They didn't lose anything. They were still living in their house.
Well, and from my
So
standpoint too, I understand that back then the banking industry really wasn't friendly with any kind of, purchase or refinance. I mean, it was if you had cash, you could buy it. If you didn't have cash, it wasn't going to happen, or you had to go through a short sale type of situation.
yeah. Well, and there's situations where, if one of the spouses is not working, sure, we're
Hmm.
going to run them through the system and see, are you able to do that?
Right.
And make it happen. Don't you can buy a property if you're married or not married or one spouse. You just have to, jump through maybe some more
Hmm.
hoops or maybe, meet with you to find out how do I move some monies to invest for 6 months or stop paying, into a certain fund so you can show more, liquidity on a
Sure.
day-to-day basis.
And I
But what
find
I
that as like a really
what
strong point too. Go ahead, Jonathan. I'm sorry.
oh no, go ahead.
I was going to say with that too. I mean, there's so many opportunities for creativity this time around. I don't think that we're in the same real estate bubble that we were, basically back from 2007 through 2011. I think that's probably the right time period where real estate went down so much that people could buy all these opportunities, scoop them up and do this. But if you were in a financial situation, which that's what they're kind of starting to predict is, once these stimulus packages stop, once the deferment of mortgage payments from some of these mortgage companies are going to stop, and then they basically bring those in, will people still be able to afford to pay for their mortgage payment? Is this artificial that we're feeling right now? And what's the forecast of foreclosures? Foreclosures and bankruptcies. I don't know if we're right there today, but I think that that's something that might be some fallout to come. I don't know. What do you think about that, Jonathan?
If I had a crystal ball, we both wouldn't be sitting here. We
Sure.
would maybe be isolated on our own little island. Um, but I think that there's not going to be a lot of activity changes, especially because we're in an election year. So,
Hmm.
so people like to keep things at a status quo. This pandemic isn't helping it,
Hmm.
just because it's flaring. All kinds of things that are going on. But typically in an election year, they don't like to have a lot of change. Good, bad, or indifferent. They like to keep things the same.
Right.
So we don't really see that. And the interesting thing is, I was talking to a broker friend of mine just this weekend,
Uh-huh.
and she's been in the business 30, 40 years. And she said, I think we're going to go below 2% in the
Wow.
next 6 months.
Wow. That's pretty amazing. That's shocking. Under 2%. I mean, here's a fact for you. The government has wanted to not allow us to write off mortgages or mortgage interest. And the lower this interest goes, the less mortgage interest we have to write off. But I know that that's still a huge motivating factor for people. So let's talk about this because San Diego, what's the average price point in San Diego today?
I think we're in the fives.
In the
I can't
fives?
exact. Yeah, low fives. I think
So
is a
what would
good.
that buy you today? What would the low fives buy you today?
Uh, uh, you could you can get a nice condo, 2 bedroom, 2 bath
Hmm.
condo. If you're talking, further, if you go inland, of course, you can get more for your money. If you're at the beach, you're going to get, if you're in I have a condo in La Jolla, 2 bedroom, 1 bath, 800 square feet, and we're selling at a bargain of $500,000.
Wow.
So that 500,000 will get you a lot more going east, where
East.
it's
Hmm.
typically warmer and not at the beach.
So let's talk real quick. And I know that you're not a mortgage, person, mortgage professional, but at the same time, when you were talking to your friend who's been in the industry for a long period of time, and she was saying that maybe that interest rates might go below 1%. Is
Two
this,
percent.
below 2%? Okay, so below 2%. I'm sorry for my mistake, but is that going to be for jumbo or is that just going to be for your average median home?
I think it'll be, of course, for credit-worthy people,
Sure.
conventional loans, that kind of thing. Because if you're the less hoops you're jumping through, uh, you're gonna have to meet certain criteria, having
Mm-hmm.
certain, liquidity and all those things too. So,
Mm-hmm.
so again, the general public under two, maybe not, because most of the general public now aren't getting below three. But if you're a
Right.
superstar and you're
Right.
staying there, that's technical terms, a superstar for somebody, then again, but you can always buy your rate down. So everybody thinks, oh, I want 2%. Well, you can have that, but you're going to pay $5,000,
Right. And
up front to buy
what's the
that down.
payoff? And I know we have these conversations too about, the less amount of mortgage interest deduction you have, your taxes, may very well go up, because we don't have that one write-off. So there's a balance to both of those.
Yeah, I was going to mention, because you had mentioned something, in the Palm Springs market. What was
Mm-hmm.
interesting is I'm going to be working with some clients that are selling their home, and I mentioned this on my weekly bingo that I do,
Yeah.
for my clients and friends. They have an estate in Martha's Vineyards that is only going for $12.5 million.
Only, yeah.
So so they're looking at wanting to invest. They've been there a long time in Martha's Vineyard, so they're gonna, change their family thing and buy something in Palm Springs. And
Mm-hmm.
I set them up on a search, and literally these 1.5, 2.5 million properties were flying off the market
Wow. Wow.
within a week, and
Hmm.
which is amazing because they loved all these properties. They were ready to go. Well, they're not ready yet, but they'll be ready in August. But it's amazing. I'm just like, either people are saying, hey, I'm going to buy and take cash, because most of the deals that happen in Palm Springs are secondary homes or vacation
Mm-hmm.
homes.
Mm-hmm.
But you know there are people out there that have, you know
Right.
dollars in their
Right.
pockets right
Right.
now.
That's pretty amazing to think. So liquidity is actually finding its way into real estate, which is very interesting, right? And we're in
Yes.
a place where, being at home and your home space is even more important to you now, more than ever, because if we have to be isolated once again, we want to be in, a home that we can actually enjoy, and possibly, I think probably pools and landscape are going to be even more important than it's ever been. Uh,
Well, at the beginning of this, I found, in Palm Springs, that there were so many LA, San Diego, and San Francisco people that were coming out to their vacation home, or they were using as a VRBO, and they said, no, we want to live there, because if we're going to be confined, we
mm-hmm.
don't want to be in the mix of all of these other people. We want to have some separation. We want to have,
Mm-hmm.
enjoy that home that we are,
Yeah.
instead of being cooped up in not a hotel, but their condo, or
Mm-hmm.
just
High
really
rise
close
or,
living style.
yeah. Well, Jonathan, what would you say is our closing comments now, for people that are interested in wanting to buy real estate, but they were a little bit on the fence before? Now I think it's more of an emotional purchase because it has to do something with, quality of life, family, everything. What would you say for people that are considering it, but maybe have been on the fence about it, or, maybe something to consider, to think about for their future?
Well, I think that, when people, talk about it all the time, there's never going to be action. And, when I work with buyers or sellers, you have to throw the line out there and find out and educate yourself. So,
Sure.
call me up, do a consultation, let's
Mm-hmm.
figure it out. And if we think that, it's not the right time, and I work together with you with a lot of clients, that
Mm-hmm.
we look at this whole scenario, because we do factor in the big picture, not just can I afford it, but what can I do to afford it,
Right.
because I really want this.
Mm-hmm.
So the consultation, with us, the lender, financial people, so we can look at the big picture. We don't want you to trip and fall, after you get to the finish line. We want to make sure that, are you going to be there for 3 years or 5 years? How your loan's going to be
Mm-hmm.
set up?
Mm-hmm.
You're going to move, and you're using this as a one bedroom, one bath condo to get you in the market.
Yeah.
Well, then, you would probably look at it differently, to say, I know I'm going to sell in 2 years.
Mm-hmm.
Hopefully, capital gains tax, is still in play, so I can use that money to
Mm.
then step up to the next home. So,
Sure.
but a lot of people don't know that. And,
Mm-hmm.
we've both been in the business, 20 some years, and, with our combined knowledge and experience, and the, we'll call it the trips that we've gone on with our clients during these places, have given us a lot of, information and background and stories that we can relate to people today.
Mm-hmm. No, I 100% agree. And I think we'll have something here at the bottom of the page that'll tell you how you can get in touch with Jonathan. But this is a great insight. There's a lot of creativity that people are finding right now. We didn't talk about this, and I know we're running out of time, but There's even possibilities for down payments right now, or even purchasing a property that your IRA could be leveraged for it, up to $100,000 due to the CARES Act. And I think that is a tremendous strategy that people are not even thinking about. So from the financial standpoint, and also making sure you look good on paper, this is why Jonathan and I over the years have really partnered in this, because it's so important for people to have that balance. You don't want to just go into something because you're going into it. You want to look really good on paper, and not everybody's a cash buyer. Let's be realistic. And banks are not closed. They haven't closed the door to be able to help with purchases or refinances. So I think that we're going to see a major market frenzy when it comes to mortgages here, even consistently going forward, probably multiple times over, if interest rates get below 2%. Oh my gosh, we've never seen this in our entire history. Federal Reserve has been challenged to go negative, and if it goes negative, what does that mean for mortgages? Could mortgages go negative too? I don't know. I mean, that would be pretty fascinating. But the lower the interest rate, the more house you can afford to buy, and that's the fascinating part of that equation. So, Jonathan, thanks again for being here. It's always a pleasure to have you. We love you, and we thank you so much for your expertise, because these are conversations that people need to be having today. So I would love for you to basically make your comments below in the comment area, chat with us, whatever works for you. Ask us the questions that you want to hear from our expert, Jonathan, or maybe you just need to look better on paper and you want to have a good team supporting you. Let us know by sending those messages in the comments, or you're welcome to send us an email at questions@Elizabeth.Dawson.com. And we're here for you. We're here for you when you're ready. Now might be the best time ever. So again, thank you so much for joining us. We will be back soon with another episode of Ways to Love Your Money. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.